Punxsutawney Phil predicts an early spring for 2016. Can he be trusted? All that and more on this consumer goods edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Tuesday, February 2nd, 2016, and joining me to chat burrito bowls, designer bags, and groundhogs is the irreplaceable Vincent Shen. What's up, man?
How are you, Sean?
Not too bad. So, Punxsutawney Phil, he saw his shadow or didn't see his shadow? How's it work?
He did not see his shadow, was not scared off, so he
Okay.
came out indicating what should be an early spring, which would be nice considering the 2 feet of snow we got last week.
Yeah. Has anybody ever done a statistical analysis of how accurate these rodents are?
I actually wish I had looked that up now because I'm sure somebody has done it. And
Tune in next week when we actually tell you if this guy should be trusted. So actually, we're really going to be talking about two big consumer goods stories of the day. First up is Chipotle. Obviously been beaten up a little bit, but are they finally moving past this whole cilantro poisoning thing?
cilantro poisoning. So first of all, CDC officially has said that they announced this on Monday, that they believe that E. coli outbreaks at Chipotle appear to be over.
Well, I can breathe a sigh of relief.
So the stock bounced up a little bit. I think it was up a little over 4% yesterday as a result of that announcement, and pretty fitting because they actually are reporting their earnings after the close today. And they also have another big event coming, which is next Monday. They have that company-wide meeting, which you had mentioned previously on another episode.
Yeah, for our listeners that don't know what he's talking about, they're actually closing all the stores.
Yeah,
and
they're
having a
closing
meeting
all the
about
stores.
like safety and just food prep and just talking about this thing, right?
Yeah, exactly. So they are closing all the stores for their lunch service. They're reopening at 3 p.m. And then, but during that intermission, call it, they're going to be broadcasting the meeting out of Denver, to hundreds of locations.
The symbolism of this alone is awesome.
Yeah.
I like it a lot.
So let's take this one at a time. And so first of all, the CDC announcement, they basically said that their agency, their investigation, indicated that some Chipotle ingredient or meal was probably the source of the contamination, but they couldn't actually identify the specific ingredient or whatever caused it. The stock bounced up 4%. It's about 400 trading. It was trading or closed at about 473 on the positive development. And keep in mind, they've kind of been dealing with these food safety issues since last August. They had salmonella cases in Minnesota in August 2015 with about 60 people affected. Then they had all those E. coli cases, which I think were like the brunt of the PR hit, where that was in Pacific Northwest, spread to other states, again, about 60 people. And then I think it was in December where they had the norovirus cases in California and Boston that affected hundreds of people.
So this has been this cascade of bad news. Yeah.
And it's really interesting when you look at some of the 8Ks they filed as updates on these situations, how the news of the norovirus cases, for example, in December really hit their comps like week by week. You could see how it swing. Things look like they're steadying, then they completely just plummet as a result of the headlines.
So the CDC announcement couldn't come at a better time because they're about to report earnings that are probably going to be bad.
Yeah, exactly.
And they can just point to be like, listen, it's over.
I think everyone will acknowledge the fact that they've had these challenges, that they're dealing with them the best they can. And, going forward, they're obviously looking to a brighter future, that's for sure.
So what kind of results can we probably expect with these likely abysmal same-store sales results for the fourth quarter and last year?
Sure. So just a quick recap. So the company initially expected to be hit for their comparable restaurant sales down 8 to 11% for the fourth quarter. That number
That's how they used to grow every quarter.
Exactly. They thought that restaurant level operating margins would be about 22 to 24%, earnings per share between about $2.45 and $2.85. And then the company issued an update about early last month that kind of basically said things are worse than we thought. Fourth quarter comparable restaurant sales are actually down 15%. Operating margins were down to 20 to 21%, earnings per share of just 170 to 190. So on all three of those metrics, they pretty much downgraded significantly.
Yeah.
And just to give you a little bit of context, for the year ago quarter, restaurant level operating margin was 26.6%. Earnings per share was $3.84, and comparable restaurant sales were up 16% year over year. So that's like a 30% swing.
That's
for
crazy
comps,
growth. Yeah.
Okay, so now for the month of December specifically, I think with some of the additional news, how everything cascaded together, they saw their comparable restaurant sales down 30%.
Wow.
Specifically for that month, and so that's what people are expecting for the fourth quarter, full year. Obviously,
Makes for shorter lines, doesn't it?
yes, exactly, and that is obviously going to have really negative impact for their on their impact on their full year as well. So we talked about next Monday, that meeting, and to be specific, the company mentioned in a press release that the point of the meeting is, one, to thank everybody who's part of the organization who has worked really hard in the past couple months to institute new stricter safety standards, make sure things are operating well, that there's no more of these cases breaking out. And then second is to announce some of their new initiatives, which they hope will guarantee that there won't be another outbreak like this in the future.
Right. Did they mention anything along the lines of the is it going to make them less profitable to have all these new safety standards? Is my question. Have you caught anything like that?
Well, the thing is, the meeting's next week. If I'd be curious to hear about details with that in the earnings call today, and also in the meeting. But I'm sure, I know for a fact that they've reported increased costs as a result of these incidents. It was like $16, $18 million, I think.
Yeah.
But specifically where they're going to, how it's going to impact some of the margins, we'll be yet to see that.
Cool. Okay. Very cool.
And another thing you mentioned that you brought up is their 2016 forecast. So basically, they've acknowledged that any previous forecast that we provided for this year,
throw them out the window.
Just throw them out the window entirely, because there's no way we can know based on this climate. And from Wall Street at least, analysts are expecting revenue and earnings to decline about 15 to 20% each. And
wow.
I think for this company long term, they are really going to need to execute well on these food safety plans, because even the slightest hiccup is going to,
it's going to
crush them. It's going to crush them. Absolutely. And then otherwise, my personal view, I'm pretty confident that they'll recover this as time passes, assuming, there aren't other very headline worthy incidents. And the thing is, other restaurants have run into issues like this, even worse ones, and they have managed to recover, let alone, Chipotle being arguably the leader of the whole fast casual movement. I think they're in a pretty strong position.
Yeah, no, it definitely seems like Chipotle's got the heart and soul of what you want in an organization doing this sort of thing. So
yeah, their leadership's embraced everything. They've been very, very forthcoming with information, working as much as they can with the various regulatory agencies that have been involved, looking into this. And I think that they're in a good place, and people should be looking to the future a bit now.
Cool. All right, before we move on, I wanted to point our listeners to a newly redesigned focus.fool.com. There you'll discover a special offer to join the Motley Fool Stock Advisor newsletter to start your year off foolishly. All loyal IF listeners have access to a special discount on Stock Advisor that works out to $129 for a full 2-year subscription. Just go to focus.fool.com to take advantage of this offer. Once again, that is focus.fool.com. And moving on from Chipotle to Michael Kors. This is a nice little follow-up to our coach show where we talked about coaches' great results. They had their first growth-based quarter in 8-10 quarters or something
close to that.
Anyway. But Michael Kors, too, has been getting beat up. Nobody wants designer handbags, I guess, but they just reported, and it was pretty good.
Yeah, so there are some very clear similarities here between the areas where Coach saw success that we talked about and where Michael Kors has seen success with them releasing their results before the open today. First of all, this is for their fiscal 2016 third quarter. The revenue was up about 6.3% to $1.4 billion, up almost 10% in constant currency. So, they have their international segment, and obviously, like many companies, that's being hit by unfavorable currency exchange. But their retail net sales were up 11.1% year over year. They had double-digit growth in e-commerce, really big, and also a lot of new store openings. So while their comps were down about 0.9%, in constant currency, retail net sales were actually up almost 16%, and comps were up actually 2% when you exclude the currency effects. So keep in mind, with that really positive revenue growth, that the company has increased its retail store count by about 20% in the past year.
Where was all that? Because that's a big number.
They had, there's about 100 locations, a little over 100 locations making up that 20%. And I think it was, obviously a lot. They have like different locations with their outlets and then their retail stores, and they also have licensing shops, like store in a store with department stores. But in terms of geographic segments, I think it was mostly in the U.S. Obviously, they're focused on their international expansion as well, which we'll get to. So I'm not
cool.
certain,
Yeah, no, it's fine. So how are we talking about? How are they doing with operating margins?
Sure. So, there are other parts of the business. Their wholesale net sales and their licensing revenue were also up for the quarter. Their operating margin shrunk about 2.5 percentage points.
Is that because they kept opening more the outlet stores and stuff?
I think it's a lot of it. Yeah. I think it has to do with a bit of an investment in terms of what they're putting into their like e-commerce initiatives, for example. And so earnings per share, $1.59, up 7% year over year, even though there was a negative currency impact about 6 cents per share. And, they're showing some really positive, this, by the way, I should note that all of this really surprised, at least what the analyst estimates were, beat them pretty handily. And their stock was up 22% before we came down. And
wow.
Another thing I wanted to mention too from their report was that they have been pretty active with their share repurchases for the past few quarters. So for this one, they repurchased about 4.7 million shares, previously 9.4, and the other quarters, the 3 quarters before that.
So this is turning out to be a really good move.
Exactly. So in all, in the past 4 quarters, companies repurchased about 20 million shares. They reduced their shares outstanding by about 10%. So during this tougher climate for them, they've been focused on making sure that they're kind of maximizing where possible those returns to their shareholders. Very positive. And specifically for their business, some of their offerings, their shoes accessories did really well. Their e-commerce, like I mentioned, double-digit growth. In their international markets, especially with Asia, again, doing very well. And, that's actually really similar to what Coach reported. They had that acquisition, and their shoes were doing really well. Some of their other accessories did very well, and their e-commerce efforts in Asia markets were big for them. So it just mirrors very closely, and you can see that. And it's really interesting. During the earnings call, CEO John Idle brought up a really interesting point. Brought up a really cool point, where from their e-commerce efforts, they noticed how in mobile and online, their offerings have expanded, but customers were flocking a lot to footwear, and like having data like that has made them realize, like, okay, that's become a really popular category for us, and now they're thinking about how that can apply to their actual physical retail stores as well, and hopefully benefit from some of that data they get from those online efforts.
Cool.
So, in terms of near-term, catalysts, they have their major spring collection planned, and big picture, we see that despite overall lower retail foot traffic during the holiday season, I think retail metrics had it down about 6% or over 6%. Not all companies have been losers. Macy's and some of these other companies have been struggling, but we know that JCPenney, for example, here, Coach, Michael Kors, they're kind of taking share away. And obviously, it's not like across the entire sector. Everybody has been struggling with some of these issues in terms of, the unseasonably warm weather or the currency fluctuations hurting tourist spending, for example. So, even though the stock's up 22% for the day, it's still trading at just 11 times trailing 12 months earnings.
The market's 20,
and I should add that Coach, coincidentally, is up about 23% since it reported January 26th. Again, really similar.
Right.
And so if management can really continue to execute with, these popular offerings, they have an attractive e-commerce online shopping model as well, and their footprint expansion, they increased 20% store count. That's going to continue. Hopefully, they're seriously worth consideration in terms of like a nice value play.
Cool. All right. Well, thanks for your thoughts, Vince.
Thanks, Sean.
Have a good one. And if you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that is industryfocus@fool.com. As always, people in this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Vincent Shen, I'm Sean O'Reilly. Thanks for listening, and Fool on.